primarily, we expect that the trends that we've been seeing will limit the ethane rejection across the US through 2025. Looking at the numbers, we see that ethane rejection was the highest around 2014, 2015. But as we've started building up more capacity and as we've realized the value proposition of not rejecting ethane in the natural gas stream, and as we've had built up ethane cracker capacity, which we'll go over in the next few slides, we see that the ethane rejection has dropped. Another factor of reducing ethane rejection is also natural gas prices. When we see that there is much more to retain in terms of pricing margin from the downstream and the petrochemical side, that's the other factor when we see lower and lower ethane rejection. In 2025, we expect ethane rejection to fall as low as 20%. It will be mainly supported by operating ethylene crackers that came up online during the first wave. We see that although utilization is at risk, but there is significant capacity that has come online, as well as several expansion projects were planned on those operating capacities. So some of the examples are the Dow Freeport or Sasol Lake Charles. Looking at the second wave of the ethylene cracker capacity that came online, we see that the Shell Pennsylvania as well as the Bayport Polymer and the Nova Chemicals in Canada have been completed, have come online. So we see some of the ethane that is being retained also go into those ethylene cracker projects. There's also CP Chem Qatar in Orange, Texas, that is being planned to be completed in the next year or so. And we still see that the global demand for ethylene derivatives, the US ethane project's outlook, which is very optimistic, although there's high labor costs and uncertainty that are actually inhibiting the ethylene cracker outlook. However, we still see that there are some projects that have gone forward, and we do expect some that have advanced to feed. So looking at the gasoline spread has increased, and this will continue to harm aromatics as a petrochemical feedstock. We see that US is mainly dominated by light tight oil, and increasing use of aromatics or toluene, to be specific, to mix it with gasoline to make it premium grade gasoline has what increased in the past, and we see that to be as an inhibiting factor for that aromatics to be used as a petrochemical feedstock. So a lot of the US ethane is also being exported, and we see that as the US natural gas remains advantaged, we see this going forward. We see this significant capacity for ethane export in the US. We expect the energy transfer partners and the Mariner East 2 to take up a lot of the new ethane capacity and be able to export it across Europe or Asia. Now, US LPG exports we've seen has also increased in the past. We see that there have been a massive uptake in terms of US LPG exports from 2014 through 2023, and we expect this trend to continue. A lot of it is going to be is mainly be driven by the stagnating Middle Eastern markets, and we see that more and more liquid feedstock needs in the rest of the world. The other okay, so just to summarize the 6 key insights that we've seen is that we expect the pricing trends to limit the ethane rejection going forward. It will mainly be supported by the first and the second waves of ethane crackers that we see have come online and have advanced to feed. Also, the increase in gasoline demand and increase in aromatics in blending for gasoline has created a little bit of a drawback for the aromatics that go as feedstock. Increasing capacity for US ethane exports is something that we'll also see going forward. We expect that to surpass 450,000 barrels per day by the end of 2023. Also, US LPG exports are growing and they will dominate the global markets as we go forward. The other factor of favorability for US ethane could also be, or US based high weight naphtha is also, or heavyweight naphtha is also because we see that a lot of European markets have sanctioned some of the Russian imports, and we see that this trend, while the Russian based naphtha could be diverted to Asia, we see a lot of demand coming for US based naphtha or US based ethane into the Western European markets.